Hello and welcome to this week's special Thanksgiving episode of Echo45 Advisors Market and Economic Update. In this video, we'll discuss three major reasons investors can be thankful this holiday season. Although 2024 has seen periods of uncertainty, inflation is moderating, the Fed has begun cutting rates, and markets have generated strong returns. While there are still things to be concerned about, such as market valuations, the national debt, and geopolitical risks, this is a good time to pause and reflect on the many positive factors in the market and economy right now, and to stay focused on the long term as well with a balanced portfolio. Over the next few minutes, we'll cover these three important reasons investors can be thankful. First, stocks have had an impressive run this year, with tech and AI leading the pack, though many other sectors have also seen double-digit positive returns. This is the case despite periods of concern from geopolitical tensions, a presidential election, and broader concerns about the trajectory of the economy. As this chart shows, other than the third quarter of last year, the market has experienced robust and steady growth over the last 2 years, thanks to strong corporate earnings and growing confidence in the economy. Strong market growth has resulted in less attractive valuations, with the S&P's price-to-earnings ratio now at 22.3. This is a reminder of the importance of holding a diversified portfolio that isn't overly weighted toward risk assets like stocks. The end of the year is a great time to review your portfolio allocation. Next, this chart shows the Consumer Price Index, a commonly cited measure of inflation. CPI tracks the prices of specific goods and services to track the general price changes for consumers. It shows that inflation, or the rate at which prices are increasing, has slowed to more normal levels. This is good news since it allows the Fed to reduce interest rates, which they have now done twice. However, it's important to note that falling inflation is not the same thing as falling prices, and it's likely that prices of everyday necessities will remain high. While investors have been concerned about the exact timing and pace of Fed rate cuts, what matters more is the overall trajectory. Lower inflation and interest rates helps individual consumers and businesses, and can help support the economy and market. Finally, this chart shows job creation re-indexed to zero in the year 2000. Many feared that the Fed would cause a hard landing when it raised interest rates, since doing so tends to have a dampening effect on job creation. However, hiring has remained remarkably resilient over the past few years, with new jobs more than making up for losses during the pandemic. While recent reports have not been quite as strong, unemployment is still low at just 4.1%. Meanwhile, the U.S. economy continues to grow, with consumer spending providing a big boost. While it's impossible to fully predict or avoid inevitable market volatility, investors should look at the many positives as we near the end of 2024. There is much to be thankful for. So, a big happy Thanksgiving from your Echo45 family. If you would like to discuss any of these topics in more detail or discuss what you can do to evaluate your financial plans as we approach the end of the year, please don't hesitate to reach out. Happy holidays, and we look forward to speaking with you soon.